In this week's episode of the Stockscores Market Minutes, I'm going to teach you the most important line to draw for traders. I'll then do my regular weekly market analysis. We'll try to decide if there is more market weakness to come here in October. We will do a market scan together in search of opportunities, and I'll look at the trade of the week on NAT. All right, so what is the most important line that you can draw on a stock chart? If you want to predict where prices are going to change direction, then by far the most important indicator that you can use simply with a ruler and a pencil is the trend line. There are many lines that we can draw on charts, and to identify support, resistance, and price patterns, really it's as simple as drawing lines across the tops and across the bottoms. When we do that, there's really none that is more important than the trend line, and I'll draw some for you in a moment. We want to draw our downward trend lines across the peaks on a chart, and we want to draw the upward trend lines across the valleys on a chart. Now, when price falls into an upward trend line or rises into a downward trend line, it will typically stall or reverse direction at that trend line. More importantly though, when these trend lines are broken, we often are then starting a new trend. So let's take a look at a couple of charts. And what I want to emphasize here as we look at these charts is that these lines were not drawn by me. They were drawn by a computer algorithm that I created. And it essentially looks for the bottoms of valleys and the tops of peaks, and it draws a line across them. And what I want everyone to notice is that the market this past week fell into that upward trend line that the computer drew across those what I call inflection points. Now, if you watched my video on would there be a stock market correction in October, you will know that that's where I predicted that the market would reverse direction. And if you didn't see that video, it's on the Stockscores YouTube channel. You can go back and take a look at that. But also notice that what happened when this upward trend line was broken back here, we had a pretty strong sell-off. And if we think about this downward trend line that was broken here, we had a pretty strong rally. And even back here, this upward trend line that was broken, we had a sell-off. And again, these lines are not drawn with me and the benefit of hindsight. These were drawn by the computer using the concept that I teach in the different Stockscores market courses that I do. And you can learn more about those in the trader training section of the Stockscores website. So the emphasis here is that to remember that when price falls into a trend line, it often bounces, and when it breaks a trend line, it often moves lower. Now we can look at this on different time frames as well. This is a 30-minute chart of the S&P 500 for this past 2 weeks. And here you can see the downward trend line that was building into October 3rd. And notice that it broke that downward trend line in the morning of October 3rd. And since that time, we've had a nice comeback rally. We have a longer term downward trend line that we can draw across there, and that's going to be the upper limit of where price is going to get stuck probably next week. All right, let's take a look at the upcoming events that are coming up on Stockscores.com. If you go to the Stockscores website and go to Trader Training, upcoming events, you can see a list of the webinars that I have set up for the next month here in October. You can see the titles there, but I encourage you to go register for these. They're free. And if you want me to do more of this kind of content, leave a comment in the comment section. Click on the like button, and I'll know that this is something popular, and I'm happy to do more if enough of you would like me to do that. All right, let's get into this week's market analysis, starting off with the U.S. markets. And we will first look at the S&P 500 on that 30-day, 60-minute time frame. Now, earlier I showed you that downward trend line, and that's where we can draw it. And so we've had a market that got a little overextended to the downside. There was a little bit of fear early in this past week, and now we're taking out that emotion and rallying back towards that downward trend line. I expect we'll get stuck around 296. Doesn't mean we'll necessarily reverse lower there, but we will stall at that price. But until this downward trend line is broken on the 30-minute chart, I want you to be fairly cautious. Looking at the long-term time frame, You can see that we have an upward trend line there that we have held so far. This is the weekly chart. We've got resistance across those tops, and until that line is broken, I wouldn't get too excited about the upward direction of the market. However, the big long-term picture is that we have rising bottoms on the chart, which means investors are optimistic. And until that cycle of rising bottoms is broken, I think it's best to remain optimistic about stocks long-term. Looking at the small cap sector in the US market, we really don't have that optimism. We've been stuck in a sideways range, and so those lower price stocks, those smaller cap stocks in the United States are really not producing a lot of great opportunity, and so I'd be very selective in that group. Looking at the Canadian markets, they have been outperforming in general this year because of strength in gold, because of the effect that the stability in oil prices has given to the Canadian market. That's been a bit of help as well. But gold, or pardon me, the Toronto Stock Exchange actually also had a fairly bad week last week. And much like the S&P 500, it fell away from its trend line. It's now trying to work its way back. Gold has cooled off a little bit, so it's not coming back as well as the S&P 500. So I would say that this is still a fairly negative chart with maybe a little bit of upside until we get to that downward trend line. Looking at the longer term chart of the TSX, we broke through this line of resistance a few weeks ago. We rallied in, typical pullback. I think this market is headed higher. However, if we move down through that support level, I think you need to be pretty cautious. TSX Venture is the microcap stocks in Canada, and they are in a situation where you have falling tops. We had some pretty strong selling pressure the last couple of weeks. The market's oversold, maybe due for a little bounce back, but generally speaking, I would avoid this market as it does not look all that healthy. Moving along to currencies, let's take a look at the US dollar first. Of course, the US dollar has been strong for some time. It continues to look strong. I think that you have to expect this currency is more likely to go higher than lower, but given that it's well into the trend, it's getting a little mature, and so eventually we're going to get a break of this upward trend line. You want to watch for that as a signal that the sellers are taking back control of the US dollar. Looking at the Canadian dollar, it is having a hard time finding a footing. It has at least stabilized, and that's a positive. We did break the downward trend line there. What we need, though, is for this little cycle of falling tops to be broken, and until that happens, I wouldn't get too optimistic about the Canadian dollar. It's stable, but it doesn't really look like it wants to go higher. On to interest rates. This is the chart of the TLT, which represents the 20-year Treasury bonds. It's an ETF. And you can see that we had a fairly parabolic upward trend. We broke that, but we've made a pretty good comeback. I think we're going to get stuck up in here. I think the pattern that you're going to see building is an ascending triangle pattern with resistance in around the 148 level. And I think ultimately the bond market destined to go sideways for a little while, and therefore interest rates should be pretty stable. And on to commodities. Let's take a look at gold first. We've had a nice upward trend in gold. This is now a flag pattern. If we can break to the upside from that flag, then we will have a continuation of the bullish trend. However, I'm a little concerned because we've got this falling top here, and we have broken this upward trend line. So if we start to move down through the lows at the 138 level, I think you need to get pretty cautious with gold. I'm sort of neutral to gold right now. I think it probably is going to take a breather after having a pretty good run for the first part of the spring and into the summer. And for now, I think generally speaking, you avoid it, but keep an eye on it because it could start going at any time. Now, oil had that break to the upside when there was the terrorism attacks on the Saudi oil fields, and that tried to break the downward trend line, but it really didn't because we closed below the open for the week, and that was a failed break, and that means that we go back into the pattern where it was basically where we're at now, the tip of the pennant. I think oil should bounce back in the near term. You may have a little bit of extra selling pressure because there was people betting that oil was going to go higher, and now they're taking their losses on their positions. So maybe we get down into the 10.5 zone, but I don't feel like oil's got a lot of downside. However, it also doesn't have a lot of upside right now either. And finally, the fear chart. This is the VXX, which is an ETN that moves with the implied volatility of the futures contract on the S&P 500. Basically, if this is going up, it means investors are nervous. They're buying insurance in the futures market, in the options market, and that is why it tends to go up when the market goes down. It has been coming down the last couple of days, which indicate that that fear is coming off a little bit, but it is still somewhat elevated. I don't think we're out of the woods with the stock market yet, and so this still could be a place to trade if the market corrects further. I don't see the signs of that yet, but something to keep an eye on. So my ratings then: US stocks, long-term neutral, bearish short-term. Canadian stocks, neutral in both time frames, neutral on gold in both time frames, neutral long-term in oil, but still kind of bearish short-term. You could see a little more weakness there in the next week or so. After strong selling pressure to start this past week, stocks bounced off of support at that longer-term upward trend line. They remain in a short-term downward trend, so traders should have some caution. Gold's momentum is slowed, but it still has some potential, so keep an eye on it. Oil is back into its pattern. It's due for a bounce, but I really don't see one yet, and therefore I wouldn't get too excited about a bounce. And there's still some fear in the market, although certainly it has come down. All right, so I'm going to jump over to the Stockscores market scan, and we will go into here and select market scan. And this week what I'm going to do is run the abnormal breaks on the US market. We had a little bit of a bounce back at the end of the week, so let's see if that generated any good charts. And so we can see that the scan found 38 candidates, and I'm going to view these in the gallery viewer, which means I look at 10 per page. And the first one that comes up is TK Tankers, TNK, and I can see straight away that it has broken this line of resistance. Didn't draw that very well. Let's try it like that. We have some optimism into that, a little bit of volatility into it. Look at the very strong volume. So on the daily chart, I say it's okay. It's not great because of the volatility into the break. The next thing I like to do when I see a chart that has some promise is to look at the 3-year weekly chart just to see how that looks. And here I'm a little more interested because here you can see that the downward trend was broken here, and we've been stable since then, and we are now starting to move through some resistance. So I think that this is likely to move higher. It will not surprise me at all if we pull back first, because the break this past week was from some volatility, and we often see a little bit of profit taking into some strength. So looking out a few months, I think it has some promise. Looking out a few days, I wouldn't be surprised if we see a pullback. So that's the kind of thinking that you want to apply. We're just looking at chart patterns and trying to figure this stuff out, but look for abnormal activity breaking from good patterns. And here we have a pattern called a flag. So we've got an upward trend there. We've got a break of the pattern with some volume. It's okay. It's going to run into some resistance up here, so the upside potential is really less than the 2 to 1 that I like to see. I think if it pulls back and then it starts to go again, it's maybe worth considering, but I don't think I'd chase it here. So as I go through these charts, I'm looking for certain patterns that I can teach in the different courses that I do. This one has a little bit of abnormal price action, but it really lacks volume, and that tells me that the buyers were not that enthusiastic on Friday. Got a lot of resistance here, so I don't think it's got great potential to move higher. Maybe 55% chance that it goes higher, but to me that's not quite good enough. I like things where the odds are a little more towards 70%. Now you'll notice that some of these I'm skipping past fairly quickly. It's just because I don't like the pattern. That's another one where when I look at the 3-year, I don't love it. We'll go through a few more here and see if there's anything else we can identify. The nice thing about this tool is we can go through a lot of charts quite quickly. So here's another shipping stock, or I'm assuming it's something to do with shipping, Ship Finance International. What you notice is that it was moving up, it pulled back into a flag, and it's breaking the flag on Friday. Problem again is the lack of volume. So I'd give this a 6 out of 10 that it's likely to go higher. It's not super, but it's not terrible. We'll look at one more page. I do these scans every day. I can go through the entire market with the market scanner in just a couple seconds, and then of course looking at charts doesn't take too long when you only have to look at 20 or 30 of them. This stock I like in the sense that it's breaking from this ascending triangle pattern. That's good. Volume is good, not great. Let's take a look at the 3-year weekly chart and see what that looks like. And there I see a problem. So when I look at this longer term time frame, I see that there is resistance up here, and that limits the upside because the downside is sort of there. That's kind of where I put my stop. The upside's about the same amount, and I like to have at least double the upside potential for the downside in the trade. All right, let's jump back to the presentation and take a look at this week's day trade of the week. Again, this is more for educational purposes, applying my day trading strategy, which is entirely algorithmic. I have coded all of the rules into a computer. And so when these lines are drawn, when the dots are drawn on here, that's all done by a computer. This is a stock that triggered our entry signal at the open on Friday. A action candle break, that's the little pink dot that you see there, breaking out of this pattern. And that ultimately led to a pretty nice gain of 8 times the risk, which means that if you risked 100 shares, or pardon me, $100, you bought 2,000 shares. That required $4,760 in capital. This stock is under $3, so most brokers won't margin it, so we're not going to use margin. Still, it provided an 8%, or pardon me, an 8RR gain, which means an $800 gain on $4,760 of capital, which is an $800 gain, 16.8% return on a one-day hold. To me, 16.8% return on a one-day hold is pretty darn good. Well, that has been the Stockscores Market Minutes for October 7th, 2019. Please click on the like button, leave a comment if you have one. I always read them. And most importantly, in the week ahead, trade well.